welcome to the opening bell. Today is Thursday, August 27th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It's a quiet morning on the FX front, while the headlines are dominated by the NVIDIA earnings beat, which beat on the top and bottom line. They gave guidance for 70% increase in revenues, really quelling some of the concerns around the AI story. In the meantime, now the focus shifts to tomorrow's Fed commentary at Jackson Hole. We'll take a look at all the US dollar crosses, guys. A little bit of a new look on Euro, which I worked out this morning. Any other questions or trade setups, feel free to throw them on the message board. We'll be getting started in just a second. All right. Great to see everyone this morning. Hey, Chandra, Daniel, DeRay, Ken, Kevin, Mesfin, Tim. Great to see everyone in the room. Won't get to you all, but great to see you this morning. So the DXY, little bit of a swell in overnight trade, but we're basically holding right at the 200-day moving average that comes in right around 99.16. Remember that on the weekly chart for the DXY, you got the 52-week moving average right there in 99. What is it now? 99.05. So we're at a critical juncture just above support, and we're heading into obviously the main event risk, or the event risk that's left for the week with tomorrow's commentary from Warsh. Look, a lot of traders, and again, a colleague of mine talked about this morning in the video. A lot of traders are looking for further guidance on September. I don't think we'll necessarily get it. You're looking for key comments with regards to the Treasury actions, with extending the buybacks by another $2 billion. We'll be looking for any kind of commentary with regards to inflation, but it's unclear, and I don't think we'll necessarily get clear-cut guidance for September. As it stands right now, traders are still at 62% for a probability that we're going to hold next month. This is where you want to look tomorrow to see if there's any shift in that expectation. But as it stands for the DXY, the bounce off support, the August high day close, the May low, this is also the 50% retracement of the entire yearly range. The focus is really on a kind of clearing of this zone. The risk remains tilted to the downside below 99.41, 99.50. Nothing changed from yesterday, guys. The median line is still right there. It's a 38.2 retracement of the ascent off the yearly low. So it's the yearly retracement. At 38.2, just basic of the decline, gets into 99.80, and then key resistance is 100 spot 35.25. That's broader bearish invalidation. Near term, you're still weighted to the downside below that zone. A break below 98.68 opens up a test of the yearly open and a potential run on the 618 of the yearly rally. Both of those zones are going to be absolutely critical if we break lower, but all things held constant, we're sitting right below that now for a third consecutive day. So nothing changes on the DXY. Here's Euro. Did a fresh retake on this, and I shot a piece for StoneX TV earlier today, just to take you back from the front. So here's what Euro looks like on the weekly charts. This stays the same, right? The focus has been, hey, we buckled above 1578. That was the objective January low, a key pivot in price all year long. Also dating back to the highs they registered back here in April of last year. So a major level. That rally failed right ahead of the yearly open, right ahead of the 618, right ahead of downtrend resistance. Now, if you drill down to the daily chart, guys, that ended up being the 50% retracement of the drop off the high and the yearly range. So was able to locate that level. We kicked off that. Here's initial support, okay? 200-day moving average, a basic 236 retracement, the most least significant retracements as it goes, converge right there. If you look at the weekly chart, okay, the 52-week moving average, just like on the daily, just like on the year on the DXY, 1635 is the 52-week moving average, 1630 is the 200-day moving average. So you get a picture that there's some support heading into that 236. Drill down even deeper. A nice pitchfork here. This pitchfork is a non-conventional pitchfork, guys, just mirroring this basic slope. The highs from July 15th and the high we just registered last week. If we match a pitchfork to that same gradient extending off the low from July, looks pretty darn clean. Really nice inflection along the median line, really nice inflection along the 75% parallel. What is this? We buckled below the median line. This does look like a break of the weekly opening range yesterday, but there's the 200-day moving average. Remember the 52-week moving average as well, and the 236. So look, Initial support for euro, the levels are really clear. The initial support is 1620 to 1630. Bullish invalidation, just as we talked about 1578 on the weekly charts. 1578 now converges on the 38.2 near 1564. That's on the January low, the May low, the 38.2, the rally, and all of that converges on uptrend support. So once again, highlighting that pivotal zone that we broke above last week as sort of the key marker, the line in the sand for the bulls on euro dollar. Now, the breakout that would officially nullify the yearly downtrend is 1793. Okay. That's the 618 retracement off the high. You've got the yearly open there. You've got the objective 2025 high close and the high week close. All of it converge on downtrend resistance. So that's your main resistance zone. Initial resistance is at that 50 that halted the advance last week. That's 1704. There's the top two targets. That whole range we looked at on the weekly chart, separate targets here on the intraday. It's 1774 and 1798 into 1793. That's the April high close. So this is the new amended levels that we're working with euro. I think it'll be a lot more beneficial for us on this new take as we got a little bit more clarity in price here. The initial focus is, can euro stabilize northbound of 1578, 1563, initial support into 1620, 1630. You need a break above 17, plain and simple, on a daily close basis. That would necessitate a break above the objective weekly high and would clear the way for a test of the yearly open and potentially that 618. So we are poised. Okay, this thing, the levels are really, really clear. I'm happy with the way this turned out. That's the look on euro dollar. Any questions on this? Into the start of next week, and we'll talk about this again tomorrow. First thing, we do get some CPI data, or excuse me, out of the Eurozone on Tuesday. And then as we head later into the week, obviously it's going to be employment week. We get ADP employment, private sector on Wednesday, and non-farm payrolls into the close of the week on Friday. So some event risk there after Warsh's comments tomorrow. Any questions on euro? Okay, that is number one. Number two, we're 3.4% off the yearly low, by the way, and the pullback is really mild yet. We haven't really even completed a full percent off the high. So potential, if we do slide lower, is a rebound off one of these levels. 17 puts us back into motion. Sterling, nice play here. It actually did go for a clip of 35.91. We pushed below it in overnight trade. We're trying to buckle above it here. The next support target was the July high at 35.58. Looks like we turned just ahead of that. So nothing really changes here. Remember yesterday in the webinar, we said we had broken the weekly opening range. We're looking for a late week low. It's Thursday. We said that as long as we stay below the weekly open at 36.45, the focus was lower. Here's the drop. Now, momentum is still sub 50. He did see a bound, a little bit of a drip into 40 there. So he could get a little bit larger of a recovery, really near term. And I'm just, because I'm all up on this. Here's what a basic 618 of that drop looks like. It converges right ahead of the weekly open. So like 36.35, 36.45 max. If sterling is heading lower, we need to break below 35.58 to really open up that test again of the potential run towards the monthly open, which comes at these dots near 34.86, and obviously 34.74 is going to be the yearly open. So rallies should be limited essentially to that 36.30s region. If we're heading lower, anything northbound of 36.58, the May high, you're looking for the potential resumption trade, guys. Let me take you back to the weekly charts real quick. Sterling is at a major inflection, and I showed you this yesterday, but it's worth really stressing. The 2025 high week close, this year's high week close, the highs from April, the highs from May, we're all right here. Okay, so you need a 36.85 break, period, plain and simple, to get this thing going and validate a breakout essentially of a major critical consolidation range we've been in all year long. If we buckle back below, we already tested below 35.91, but if we close below that, the 618, the yearly range, that's the threat that 4-week rally might have a little bit more kickback to go. So sterling is up against major resistance, 36.85 into 36.91. That's 2 equal legs off the low. So another reason that if this breaks would suggest this is not just a corrective move, but the potential for a larger sort of continuation of the broader uptrend. So sterling levels remain unchanged, pretty clean. If you were holding this from yesterday, watch the again, that 618, 1630, 1645 would need to hold. Stay nimble heading into tomorrow's release. Anything sub 35.58 would suggest you got a larger pullback underway in the British pound. Aussie. So I'm in the process of writing the Aussie weekly forecast right now. It'll be out at 2 p.m. So I still got some work to do on it, but let me show you what I'm working on real quick. This looks like a mess, I know. Here's the slope I've been showing you guys for the last, I don't know, 6 months. This is the basic pitchfork we've been tracking off of the objective low from November, okay? We broke that slope in June, and for the last 1, 2, 3, 4, 5, 6, 7 weeks, we've been searching resistance right along that slope. Last week, we broke 71.20. We talked about it ad nauseum here. That was a major breakout. The next major region of resistance is 72.08 into 72.13. Okay, we're approaching that now. That's absolutely critical. It's the 618 of the decline off the 2021 high and the 100 off last year's low. So this is what we've been working with. Consider this slope. I don't know if I'm going to actually switch it up yet, but this is a little bit of a different take. If we go further back to last year's lows, okay, the low, high, low into the close of the year, objective pitchfork, and you move the interior level from the 50, which is what we typically work with, to the Fibonacci consideration of 618, you can see some pretty nice inflection here. Resistance, 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 break of the median line, test of the 618, break of the median line, acceleration, uptrend resistance, break of the median line, bounce at that was a perfect bounce, by the way, at 68.80. And here we are back at the highs. So another take, I think, might serve us well in the days ahead. It's not going to have major implications right here, right now. 72.08 and 72.14 is max resistance. That's the level that needs to break to mark resumption of the uptrend. You'd be looking for the 2019 high at 72.95. You'd be looking for 74.26, the 2022 high we closed. But on the weekly chart, we're approaching a pretty major region of resistance, okay? So that's sort of the focus there. I'll be working on this for the next couple hours. You'll see what it looks like at 2, but I think this is a little bit more of a dominant slope that might help us. The daily charts remain unchanged, and so is the 4-hour. So the objective pitchfork we've been working off the July low remains in play. You can see that we're testing it, that 75% parallel again. Here's major resistance, major resistance. Okay, drill down deeper. Here's the 4-hour chart. We're attempting to break the weekly opening range highs. There's 72.14 to 72.08. Look for a larger reaction there if reached. Next upside target 72.58. Okay, now initial support. If this breakout is legit and momentum isn't really giving us that tell yet. In fact, on the momentum signature, the last 3 highs in price have offered considerably decent divergent signals. Price action, new high, oscillator, not a new high. Price action, new high, oscillator, still not new high. Okay. Now, these kind of conditions can hold, guys, until the 70 level pops. And if it does pop and we're through 72.13, that's the run. But right now, the rally may be vulnerable into this zone. So really near term, if you're looking on positioning or you're holding positioning on this, if Aussie's heading higher on this stretch, weekly open support comes in at 71.70. I want to see any pullbacks hold that level. It's kind of tight. I'm just giving you a real near-term picture here. But if we break back below that, it essentially nullifies the opening range and it puts you right back in that key zone that we're looking for a break of. So look for 71.70 on any pullbacks today to verify this thing is going to go for a clip of 72. 72.13, 72.08 is absolutely critical. As always, not a trade recommendation from FOREX.com or StoneX, guys, just my humble interpretation of the technicals as they stand now. Questions on Aussie? All right. Moving right along. Dollar CAD. So that stretch kind of pushing a little bit, but not giving us much. So here's the daily chart. There's nothing really to update here. The 4-hour chart has just been insanely clear. It was freakishly clean, right? Yesterday when we were talking, right here in the webinar, this is where we were, right into that upper parallel. And we said, look, there's a pivot at 39, but you're testing slope resistance. Again, this is an objective high, low, high that extends from the high we registered in June and the subsequent high on July 27th. Really nice play on all the interior levels. here's downtrend resistance. So at this point, you know, the long side still remains vulnerable. Here's the 200-day at 38.46. That's initial support. If we break back below that 200-day moving average on a closed basis, it does suggest you could see another test of 37.75. But I want to see that hold if we're going to go for a break over the next couple of days or hours here. The key zone of resistance, remember, 39.55 into 39.41. That's the level that would solidify a more significant low is in place and a larger trend reversal is underway. Right now, we're testing downslope resistance. That 39.08 level, by the way, guys, just a pivot in price. It's not a major technical factor, but if this near-term upslope has broken, now converges on that slope. So look for a pivot there. Key resistance 39.55 if reached. Initial support of the 200-day moving average, that's 38.45. Key support, anything below 37.74, 37.76, you're essentially looking for a potential resumption of the downtrend. That was the low day close for the month and the 618 of the entire yearly range. Really nice pivot back here in May. Anything below this would mark resumption of that downtrend. It would nullify the possibility of this being a larger rebound. No news is breaking with regards to the tariff negotiations that have broken down between the US and Canada. You know, that's always an X factor that could come into play, but I haven't seen anything that there's anything improving. In fact, just more sort of retaliation from both sides going at it. So listen, the interest rate disparity is going to actually continue to favor the dollar, but you know, we'll continue to check this one out. Look at that near-term trend and trade accordingly. You're testing downtrend resistance right now. Next week, Canada is going to be a doozy, okay? Because we get that double whammy Jobs Friday where we get a non-farm payrolls and Canada employment change at the same time. So something to look forward to hopefully give this thing a bit of a kick here. All right, that's dollar CAD. Dollar yen, nothing to update here. That's the tightest weekly range out of all of the majors. Key levels are unchanged, 160.36, 160.74. Key resistance, you need to break below 157.70 to mark resumption and the potential for a larger kickback here. And finally, a break of the objective yearly uptrend. This has not broken yet. I published a piece on this yesterday. We are still trading within the confines of the 2025 uptrend. So despite the coordinated intervention and the massive drop we saw, this thing is barely clinging on to uptrend support. You need to close below 57.70 to mark or to validate that breakdown of the 2025 uptrend. Do keep in mind that the yearly open converges on the 52-week moving average at 56.70, 56.67, right there. So watch for a pivot there. It's also the low week close, excuse me, for May. So that's going to be your first level on the downside, but the focus is really what happens along this pivot plane at 58 into 57.70. So no change on the dollar yen levels. Last but not least, quick look at Swissy. So that 75% parallel held yesterday, even though it looked like we were buckling above the 38.2. There's the 75 tag. Here's the pullback. Watch today's close with regards to this range. Remember, 80.41, that January high, has been a massive pivot in price all year long. It's also the March highs. It's also the swing lows late here in July. So look for a reaction here. Momentum hasn't really turned positive just yet. So would look for that break above 50 and potentially a break above this slope really to validate that move. Initial resistance, if we hold here, monthly open comes in at 80.78. Key resistance is still 81.25 into 81. This key zone right here. That would necessitate a breakout of the multi-month downtrend, and that would suggest, again, a more significant low is in place. But all things held constant, you're right at downtrend resistance. Okay, initial support from here is 80.09. That's the swing low that registered there on Tuesday. It's pretty darn close to the objective weekly open, which is just a couple of pips higher right here at 80.11. So that's going to be the zone that, if broken, probably looking for another resumptive move. Again, the yearly open converges on the 200-day moving average near 79.30, 79.26. All of the majors, guys, are kind of stuck in these really tight ranges. The levels are super clear. There's just no conviction momentum breaks giving these things any major runs. So again, it might, if you're frustrated or it's been really tight trading ranges for you, I don't blame you, but Stay patient, stay nimble, ready on the trigger, and things should hopefully pan out as we get through some of this event risk over the next couple of weeks. Good morning, Mike. Euro Yen says, Mesfin, sure, let's take a quick gander at Euro Yen. We've been tracking that for the last couple of days. No change. Mesfin, this is a clear-cut weekly opening range. Like this one's going to be one of the ones I think if you do see the break would give us some clarity. We've broken that really near-term uptrend, but remember, that's only a 2-point trigger. I'm not really going to stress that. Drop that at this point. The whole focus has been 86 into 86.11, 86.18. We're right at resistance. We're right at resistance. So a couple things to look at here. Momentum is at 60. We literally topped 60 earlier this week. Right there. This is the first recovery that we've gotten from the oversold condition that we briefly registered on the back of the intervention. This is your 60 breach. So a 60 breach in momentum, breach above 86.63. That's a conviction breakout from a technical standpoint that a much more significant breakout is underway. But all things held constant, your weekly range is preserved right below resistance, right? Let me stretch this focus for you. So this level right here, that you're looking at, this is the high day close for the year. Let me bring that here as well. So this is the main zone of resistance that we want to consider for Euro Yen. Make sense? But it's right there. I mean, that's probably one of the most well-defined weekly ranges that you've seen out of all the crosses at that point. Initial support still 84. 184.45 bullish, or I should say resumption of the downtrend. Key support would be the January low day close and a basic 38.2. So anything sub 83 would basically suggest the downside's back in play. But all things held constant, look for a break of that weekly range. Hey, you're more than welcome. Mesfin says, thank you, Michael. Makes sense. Kenneth wants to take a look at Kiwi. Kiwi broke higher last week, remember? And we fizzled out a little bit, but we're still above the pivot zone at 59.14, 59.28, Ken. So that converges on that 25% parallel for the upslope we've been tracking basically since the late July low there. Pretty decent setup. It was a nice breakout. That's a pretty nice pivot zone that we've been tracking. That 618 of the yearly range. And again, the swing low from back here in February, you can see how many major pivots we've made along that slope. So that's near-term support. I'd want to see that hold if Kiwi is heading higher on this stretch. Resistance at 59.40. Anything above 59.40, you're looking for a test of the high day close for the year. That's 67 or at 60.78 right up here. Okay. The momentum on this one specifically, Ken, on Kiwi is really tight. I mean, we've been straddling that 50 line all week long. So there's not really a conviction push behind this immediate move. Support 59.14, 59.28. You need to see a break above 59.94 to mark resumption, plain and simple. Anything below, just for argument's sake, Ken, anything below the objective monthly open, that's right here at 58.93. Anything below this zone would be a break of the June uptrend. So initial support, if we're heading higher, I want to see this hold. Bullish invalidation is right there. Okay. And you can see on the near term chart, that slope converges right on that, basically into the close of this week, into the open of next week. So yet again, another major where the levels are super clean. We just can't get any momentum on these trades. And it's been frustrating, but we take what the market gives us and we stand ready to act. It's during these times, guys, that you spend much more times with your charts. You know, it's a very cliche comment, but a good friend of mine years ago, you might have heard of him, Todd Gordon, would always say, plan the trade and trade the plan. So let's keep that in focus over the next couple of days. All right. Anything else on the FX front? Do let me know. We've had some questions in the room on Aussie yen. Aussie yen is testing resistance. Remember, we called that breakout of the weekly opening range earlier in the week. We're now testing resistance as we speak, guys. The high day close extends into 114.82. The high from last month is 114.67. We just topped out right there. Okay. And the momentum here is constructive, but we're reaching the highest levels since April. Okay. So if we're going to get the breakout, we want to see that push higher in momentum. We need to see a close above the high day close at 1483. And that would be a clear-cut breakout. I don't even have any targets measured out above that on Aussie yen. I'm going to have to spend some time on this chart, but do keep in mind, all things held constant, we are testing lateral resistance right here, right now on Aussie yen. Intraday momentum is in overbought condition. So the onus is on the bears to defend this zone. Otherwise, a pop through, look for that upper parallel, comes in somewhere near 1560s if this breaks. You got another 90 pips, 100 pips from here, but we're at resistance right now. Initial support, well-defined, 113.70. That's a basic 786 retracement from the decline off the yearly high. That's also going to be the close, the high day close from back here in 2025. Excuse me, that's not 2020. What am I talking about? This is the March high day close. And that's really well defined at 1370, 1368. Anything below this, again, you're threatening a larger kickback towards that 618 at 112.75. So this has been a decent one. I'm not sure who asked about this earlier in the week, but that weekly opening range did yield a nice play. You're now testing initial resistance right here, right now. Ken says, thank you, MB. More than welcome, Ken. Great to see you in the room, sir, as always. All right, gold. So a little bit of a give back here, as we were talking about since the beginning of the week. It's been a slow grinder, but it's exactly the situation we expected. This is the first break, by the way, below 50 in intraday momentum of the week. It is testing a break, and we talked about this yesterday, of the weekly opening range lows. So it does show the potential for that kickback towards support, as we've been talking about. Listen, 4506, 4533, that's uptrend support. That's the 38.2 retracement of the entire decline off the March high. That's the 618 off the April high. That's the 2025 high day close. Not Mike Boutros' opinion, not FOREX.com's opinion, fact. Now, the upslope converges right there. Okay, the 200-day moving average converges right there. Take it back to the weekly charts, and there's the key pivot zone that marked the breakout in gold. So if gold is heading higher on this stretch, losses would need to be limited to 4506, that 200-day. We need to close above 4517 to mark resumption. Next major key level of resistance is 4855 into 4841, the April high close, and a 618 of that entire March decline. Clean, clean, clean. Questions on gold? All right, oil bounced off support. We highlighted support yesterday, 2 days ago, and we're still holding it. 79.16 to 80.75, the 618 retracement of the rally, the 2025 high and the high day close, a beautiful pivot in price. That was the low we registered back in April. Remember, 85 is the objective high day close. The monthly open is 84.62. That's initial resistance. Okay, obviously completely determinant by the headline flow that's coming out of the Middle East, but it doesn't seem like there's any progress being made. There's reports today that Iran is still able to export some oil, and so that's kind of been on the table as well. You have a basic slope support here, which could be in play. That would actually be a third, if we take it to the low, yeah, converges right on that same zone into the close of the week, okay? And just lowers the 200-day moving average. So this thing is stacked. At the end of the day, 77.13, that's the break that puts you right back into the bearish trajectory for oil. So all things held constant, oil's trading just above support. Look for reaction there. If we're going to head lower from a technical standpoint, 85 would need to hold. You need to close below 77 to mark resumption. Again, subject to headlines coming out of the Middle East. Last but not least, Bitcoin, still at resistance. Nothing changes. This puppy has been the clearest, okay? Beautiful breakout of the objective monthly opening range on the 19th. We broke out of the objective May downtrend a couple of days later, and we're stuck at key resistance for the last few days. 80,589 into 81,447, the May high day close. The 200% extension off the low, former slope support, turned resistance, looking for a reaction here. Now, momentum is starting to wane, but you're still in overbought condition, right? You haven't even seen the slope turn down lower. So this is still in favor of the bulls for now. On pullbacks, if we do get a nasty kind of reversal trade, losses need to be limited to 74,434. Key resistance is up into 84 proper. 84,000. You have the 38.2 of the decline off the record high. You got last year's low day close, the highs that you registered back here in May, the 52-week moving average, the median line, all into 84,100. So we're testing initial resistance now, but that's the break that you really need to get the bulls right back in control here. So we haven't cleared the major hurdle just yet, but certainly on the intraday charts or on the daily charts as it pertains to here, you still want to work with a breakout attitude well above 74,434. Make sense? All right, 10 o'clock on the dot. Even though there's not much volatility, we're still able to fill the half hour. So look, tomorrow, 10 a.m. is when Warsh takes the headlines. There's not going to be a Q&A, so we're not going to get like the back and forth that we get with the Fed rate decisions. But certainly these comments and the commentary in general will be well curated by Kevin Warsh. We know his stance on forward guidance. We know his stance on increased Fed speak and his not wanting to be, or his dislike of increased Fed speak. So it's going to be interesting to see what he offers tomorrow. The focus will be, again, on any comments he has with the new announcement from Treasury last week. Look for any kind of indications on where inflation is, on where the Fed sees inflation, and we'll pick up things tomorrow morning right ahead of his speech here at 9:30. Till then, best of luck trading, guys, and I'll see you in the morning. God bless.